Today I have with me Pete.Metz of Vaughn Mortgage, and we're going to do a real estate roundup. What's happened this last month? There's been a lot of action with the tariffs and how that, we're going to explain how that might affect rates and housing in the future. And we're just going to talk about what happened this last month and what we see coming in the next few months. Yeah. So Pete, great to have you here.
Thank you, Wayne. It's always nice to come and talk and hang out.
Yeah, it is great. It is great. So everybody's wondering, how are rates being affected with the tariffs, everything that's going on in the marketplace and the world economy? How's that being reflected in what you're seeing? How does that affect buyers?
So the interest rates all the way up till the president announced the tariffs. He came out and announced, I think, on the 3rd or 4th of April of when they went into place, right?
Okay.
They went into place, and he had that day that he came out and said it. So when that happened, the markets crashed. And over a week and a half, interest rates shot up by about over 50 basis points, or over 0.5%. They shot up, which is a big move. The 10-year Treasury went from like 3.9 all the way up to like 4.6 within a matter of 3 or 4 days.
And why does that matter?
That matters because the 10-year Treasury is what you can kind of follow to follow the 30-year fixed mortgage. It's a longer-term rate, and you can kind of, if the 10-year is getting better, it means mortgage rates are getting better. If the 10-year Treasury is going higher, that means interest rates are going higher. 30-year fixed mortgage is going higher. Okay.
Right.
So the 10-year Treasury went up, 60, 70 basis points within about a week period. And so a lot of people got scared. I had clients that are in the middle of buying. So their payments being affected. They're like, Pete, what's going on? Why is this, happening? So what happened this last week is the stock market also crashed. We saw the huge volatility in the stock market.
Right.
So when you have big volatility in the stock market like that, these hedge funds and these pension funds, everyone that's in the market, because the market came down so fast, they had to cover they call it a margin call. And I can get into margin call, but basically they had to get liquid.
Right.
So they had to go sell their treasuries, the 10-year Treasury and mortgage-backed securities, because they also buy mortgage debt. And they had to sell that to get liquid to cover their positions, which is why interest rates went up temporarily, in my opinion.
Okay.
Rates went up temporarily, about 0.5 to 0.6% over this last week. But the last 2 or 3 days, rates have been getting better. The 10-year's been coming back down.
Okay.
With it all calming down.
Right. Oh, wow. So, there's been a lot of debate how the tariffs might affect housing, especially because that's really what we're talking about now, and jobs. And you got to have jobs so people can pay mortgages. And one of the things that has been interesting to me is the fact that with this whipsaw policy that we've seen, how does that really affect home prices? What I'm seeing here in Shasta County is there's a lack of inventory, even though there is more inventory coming on the market. As a matter of fact, we can even talk about that. So there is a 7% increase in new listings. So that's almost,
So more homes on the market.
More homes
for this
on the
year
market
than
for this year than last year
at
to
this
date.
this time.
The average sales price has gone up to $402,000 from year to date. And the average days on market, just kind of overall, the whole market is about 103 days.
So if you
by the time you put it on the market and by the time it closes.
103 days.
103 days for closing.
Still pretty good.
Yeah, it's still pretty good. And the year-to-date closings, though, are 12% down from last year. So that's kind of an interesting statistic.
Yeah.
In my view,
So the number of closed transactions down percent. Not as many transactions happening.
Correct.
Yeah.
Correct.
Yeah.
So we'll see how that plays out as the year goes along. So what does that mean for buyers?
With the tariffs and with what's happening, or with the
Well, and it also, the other thing in Shasta County, it isn't just the tariffs. Because in my mind, tariffs just means at least temporary inflation, if not long-term inflation. When I say long-term, 5 years, maybe 7 years, because to reshore so much manufacturing, you have to be able to get all the components and parts, which we're a global market now. So we're bringing all these things in, and we don't have the capacity to replace that at this point. That means that factories have to be built.
So what you're saying, what I heard you say is, and I agree with you, because it could be an actual 4 or 5 year period before the prices come back down with having the stuff made in America instead of made somewhere else. That's the whole point of the tariff.
Correct.
Is to have more jobs here and more production here. So it's like what you're saying. I hear what you're saying. So another 4 or 5 years for the higher prices before the prices come back down.
Right. Because the reality of it is even if you say you moved your factory to Texas, where it's super easy to build stuff, you can fast track it, you can really go. It still takes about 4 years, because you got to have the plans drawn.
Yeah, you got to.
You have to go through the motions. You got to get it financed. The capital markets, have to, want to fund it, or your company has to be able to fund it.
Yeah.
And you got to go through all these hoops. It isn't overnight. So it's very easy or fast to pop up a tilt-up building or whatever, as long as it's kind of a mid-range manufacturing that doesn't have all this special equipment in there to make chips or whatever.
Yeah, it takes a while. Yeah.
It takes a while.
Yeah.
But, how much is robotics going to affect the labor market? Because it's getting cheaper. You're seeing AI in everything, and it's just a matter of time. So, what's going to happen to the workforce in those things? We don't know. Nobody knows. Yeah. So, there's a lot of confusion.
There is a lot of unknowns, because we haven't seen tariffs like this in not in my lifetime. I don't know.
I think it was 1938 or something like that.
Yeah, before your lifetime.
Yeah, before my lifetime too. I'm not that old.
Yeah. So we don't know necessarily, and it's a lot different today than it is from 1930 or whatever. It's very different. It's very different. So it's hard to say. My best guess, as far as real estate goes, I don't think it's going to really change too much the projection of real estate, and that's only because we don't have a lot of listings. We still need inventory.
Right.
If inventory stays low, I think that real estate's going to continue to do well. Unless they can figure out a way to build homes a lot quicker, faster, easier, and at a lower cost, then home prices are going to continue to do well. Especially, go ahead.
Right. Talking to some friends that I have that work for one of the largest lumber companies in the nation here locally, they were talking about the tariffs with Canada, that we're importing a lot of material from Canada, which if they open the forests up, we can actually, create lumber here at a lower price.
At a lower price.
At a lower price, and that's a real bonus. The other side of it is, and I'm just guessing here, but a lot of components like refrigerators, dishwashers, heating and air conditioners, all the things that you put in a house, how much is really being manufactured in the United States now? And now we're going to bring that back. And so what is that going to cost? Which I think it's going to increase the cost of housing. And the municipalities, the problem is a lot of the municipalities, especially Reading, like Reading's $5 million, I think it's $5 million or $7 million in the hole every year.
The budget for
the budget County, for City of Reading. And so, the only way that they can collect that is either through some type of
sales tax.
Sales tax would have to go up, and no one's voting for that, even though it would solve the problem. It'd be very minor, but that's not been the case so far. Or they have to get it from building permits. That's the only way that I'm aware of that they can do that. Maybe I'm wrong. Maybe there's other rabbits they can pull out of some hat, but that's just the reality for this area. So I think housing prices are going to go up. So new housing goes up, it'll also drag along it any used housing that you have.
Correct. Yeah. Yeah. And I agree. I think I think the tariffs can definitely bring housing up. It's
Right.
going to take a long time before we can build a dishwasher in America. Right?
Yeah.
Manufacture a dishwasher
guess,
in America. I mean, yeah,
Right.
that's the way I'm looking at it.
Yeah.
But it's also I think it's going to slow down. So what we're talking about is affordability. So home prices
Right.
continuing to do well and going up. That's good for homeowners, not good for people that need to buy a home.
Right. First-time buyers suffer.
The people that need to buy a home, I do think I feel like there's good news ahead for the people that do want to buy, because with the higher prices of the dishwasher and the higher prices of everything, because it's going to take, to your point, it's going to take time, right?
Right.
And so that's going to slow our economy down,
Yes.
in my opinion.
Correct.
I believe it would slow us down.
It's just going to slow us down.
Yeah, it would slow us down. Having higher unemployment, and I believe that the Fed is going to be more concerned on the unemployment than the prices going up.
Right.
And so with that being said, I do believe interest rates will come down with the economy slowing down. And historically, that's been the case.
Right.
If we go back 60 years, every recession, interest rates get better and home prices get better,
Right.
except for the Great Recession when we had the great mortgage meltdown. But
that was.
Yeah. But I do think that.
Thank you, Wall Street.
Yeah. Yeah.
Anyway.
Yeah.
Just had to throw that in.
But I do think that there's good news on the affordability, with rates coming down. But we need rates to come down for affordability. That's the only way, because we're not going to get it with real estate prices.
Right. So there's also some other issues with Shasta County that I've been thinking about. So you have the DOGE that have really tried to cut the federal workforce.
Oh, Doge. Yeah, DOGE.
Doge.
Yeah.
So, doing the layoffs and all that, I have friends that are in FEMA, I have in forestry, all these different things. So I Googled, actually I chat GTP'd and asked chat GTP how many federal employees are in Shasta County.
There's a
and
lot.
It roughly said 10,000 people.
There's a lot.
But it didn't count all the people that are employed by grants, too, in Shasta County.
By grants?
Grants.
Oh, I see.
Yeah.
Like getting funding.
Getting funding.
Yeah.
All these different programs that people use for employment. So I'm going, oh, okay, what's that going to happen? How's that going to look? What's going to go on there? But at the same time, I think there's an influence of you have baby boomers retiring. We see a lot of people move to Redding because they have children in the Bay Area and then they have children in Seattle or Portland.
Oh, kind of a middle point.
And it's the middle point. It's affordable.
More affordable.
It's more affordable. If you're going to be in California.
More affordable,
It's more affordable. It's one of the most affordable places to live in California, that has the shopping and the recreation and all the good things here.
Yeah.
So the other thing too, to kind of offset that, is I just drove by the Wintu Indian Casino, and they're breaking ground on their $200 million, I believe it's $200 million hospital. Something like that. I mean, it's a huge number, and they said they were going to employ like 200 people there.
Wow.
So then you have Bethel that's building again, doubling their size. It'll be interesting to see where they go. And then there's talk of the airport expanding, and that even I believe it's Amazon is doing a study.
Wow.
Out there.
Oh, really?
Yeah.
Oh, really?
Yeah.
Oh, wow, that'd be insane.
And so there's manufacturing that's coming out to the industrial park.
Yeah.
So we'll see if that continues, but I mean, we could see
if we saw
employment come up here.
Yeah. So what you're talking about is the unemployment rate in Redding, in Shasta County.
Correct.
Yeah. So with the layoffs, with Doge laying off all the public service workers and stuff, for sure that would affect our unemployment. And if they are homeowners, then they're going to have to sell the house.
Right.
Potentially. Maybe.
Well, the other thing too is so much of the outlying areas. There's a lot of equity in homes of people that are over 60, 65, and so they're staying in their homes. They're not really ready to move until something happens. Very rarely do they go, I'm going to sell my big house and move into assisted living. Something usually has to happen. But we're seeing more and more the trigger is fire insurance.
Yeah.
Yeah.
Yeah. Yeah. So that's a huge headwind for for real estate. Yeah,
Right.
Huge head, and it's getting worse, the insurance piece.
Yeah, it's not going to get any better
Not getting
because
better,
of the
yeah.
Palisades and the other area.
I
that
think they
burned
have
in
to
LA.
fix it. We got to figure out how to fix that.
I don't
gotta
know
fix
that all the insurance people I'm talking to say it's just going to continue to go up.
Yeah, I know.
Yeah, because they weren't allowed. They said they weren't allowed for many years to raise their rates gradually. That the insurance commissioner kind of suppressed it, and so then we had all these big fires and all this stuff happen, and so now they're pulling out unless they can raise their rates, and I guess they're easing up on their ability to raise rates.
That should be good, don't
Yeah,
you think?
might have more competition.
Yeah, competition, bring the prices down.
Right.
Yeah,
So it'll be interesting. But the thing that's important to remember for buyers is you want to get in the game.
You got to get in the game.
You got to get in the game because housing is going to continue to go up. You want that to be part of your portfolio investment strategy long term.
Yep.
It's like a forced savings account. Plus,
Yep.
you get some tax benefits.
So I think I've talked to you about this before, but I did a study on if you bought a house today for, let's say, $300,000.
Okay.
That payment's $2,500. So someone that's renting might be paying $1,500. So that's called an extra $1,000 that we're talking about. Getting in the game, it's going to cost you at least an extra $1,000.
Sure.
Let's call it. Well, what can you do with that extra $1,000 if you didn't buy? Well, you could put it in the stock market.
Right.
You could invest that. Well, to get the same return in 10 years, I did the study, I did the math. Based on our historical appreciation here in Shasta County, I actually was a little bit more conservative, a 4% market appreciation over 10 years. That $300,000 house, you'd have $200,000 of equity. It's actually $230,000 of equity. To get that same return on $1,000 a month of extra spending money, because we're talking about extra spending money to put into your housing, you'd have to have a 14% rate of return in the stock market year over year to get that same return on equity that you would on buying a house.
Wow, because it doesn't have the leverage.
Because it does not have the leverage. Exactly.
It does not have the leverage of a low down payment.
Yep, exactly.
And
and
it's still cheap money.
And to your point,
from a financial standpoint, it's still cheap money at 6.5%, 7%. It's still cheap money.
Absolutely, it's $2,500 a month.
When you look at it from an investment side,
and to your point, it's a forced savings account because let's say you didn't. Let's say you're like, I'm going to take the $1,000 and save it. Well, do we save our money?
No.
We buy the quad. We get the car. The new car payment, extra $900 for that.
Oh
my
God, car payments are insane.
Yeah, they're going to consume. It's going to
it's going to get consumed.
It's going to get consumed and not into assets. It's going to get consumed into non-assets. So get in the game.
Get in the game.
Point. Yeah.
Well, and then I think a lot of us fall victim to I need that Starbucks. Well, a Starbucks coffee now is how much? 6, 7?
Oh, it's ridiculous.
It's just crazy. I catch myself because I drink I love coffee.
There's a reason why they're building 3 or 4 Starbucks in town right now.
Yeah.
Right?
Right, exactly.
There's a reason. I mean, they're building one in Palisadro. They just built a new one over off Hartnell in the shopping center there. I mean,
and then people go out to eat. I don't even know how a family can go out to eat anymore unless you're going to Burrito Bandito and getting one taco for $5, or you're going to In-N-Out and get whatever. But I mean, I just see all these restaurants full, and I'm going, how do people afford that? So, I mean, we have a business expense because we get wine and dine our
Yeah.
business partner, clients, whatever.
Yeah.
But that's different than the average family.
Yeah, and food prices going up. Me and my wife are building garden beds. That's what I've been doing the last 2 weekends, building garden beds, have my own garden.
Yeah.
Have good food.
Good food,
and
healthy.
Healthy and lower price.
Yeah, it's pretty amazing.
Yeah.
But, there's different ways to, take a look at your budgets.
Yes.
Where are you spending your money?
Mm-hmm.
I mean, Freddie went to see our granddaughter play basketball, and they charged $20 a head
To get in?
It's like,
Yeah.
She goes, "I'll send you video. You're not going." I'm not just, it's like, but
Yeah.
I mean, it's just all this stuff adds up.
Yeah.
And not that it's
turn.
bad. I mean, everybody, needs to, make a buck. But really, when you track your expenses, you'd be surprised
Yeah,
how
what you
much
can save.
leakage and spillage of your
You can
money
save, yeah.
go into crazy stuff that if you really wanted a home, you can adjust things.
From personal experience, if I'm really doing well on my monthly expenditures and I'm bringing in more than what my expenditures are at, and I
Right.
see my bank account growing, well, naturally, I'm just going to continue to keep spending. Oh, I can go out to eat.
Right.
Oh, I can go here. Oh, I can travel here. Or I can, afford, the
Right.
$6 coffee. I'm doing fine. It's like what you're saying. It leaks right out of my bank account.
Right.
It just kind of leaks.
So I'll give this is true. When Freddie and I first got married, we were moving from one town to another. We didn't really know what jobs we were going to have. And so we actually figured out our budget, and each person got a envelope of money for the week.
Wow.
And
Genius.
it's like say $100.
Yeah.
It was something like $100, or I
Yeah.
don't know what it was. It wasn't a lot.
Yeah.
But it was like, you really had to, it became kind of a game. It's like,
Yeah. This is
How much can I
this
save?
Is all you have.
this is all I have,
That's all you have.
I wasn't drinking a lot of coffee out
Mhm.
at that
Yeah.
time.
Yeah.
Stuff
Yeah.
like that. And then, the other thing too is we take it for granted. We're going to jump in the car, run across this, cross town, go pick up kids, go do this. Oh, I should have got a tomato. I got to go over to Winco because that's the cheapest.
It's
Yeah,
better than gas,
and we're just burning gas
Yeah,
like
yeah, yeah,
crazy.
yeah.
We're not planning our trips. And
Yeah.
so there's many, many ways
Right.
that if you can make it, gamify it,
Yeah.
you can save a lot of money and
Wow.
create like a thermostat on your
Yeah.
wall where you're saving
Yeah.
money towards your down payment.
Yeah, and if you bump that housing payment from $1,500 to $2,500, well, shoot, you don't have it's forced. Boom.
Well, the other thing too is if you're W-2 employee, now correct me if I'm wrong about this, when you buy a house, can you change your deductions?
Absolutely, you can.
Okay,
Yeah.
explain that to the lay people.
So when you buy a house, you can deduct the interest that you pay to the bank on the interest rate that you're paying. And so it works sometimes and doesn't work some other times. And
Right.
let me explain that. So they changed the tax law a few years ago where they said you get a standard deduction. So when you get a standard deduction for you and Freddie, between the two of you, you get up to I think it's like $13,000 or $14,000 each of you. So it's like, let's call it $30,000.
Okay.
If you pay more than the $30,000, anything that you pay over that, you can deduct from your income or
Okay.
from your taxes that you pay. So you can literally save on your taxes. So the way to make it really easy to understand, if you're buying a home for more than $400,000, then you can more than likely have a great deduction on income, so you actually make more. So what you're saying is, if you're a W-2 employee, you reduce the amount of taxes that you pay with your W-2 by increasing your deductions on your W-2, so you
Right.
get more take-home money
Correct.
to cover that housing payment.
Right.
Yeah.
And I ran into this years ago, selling homes and looking at the different loans and all that, and people would go, the person sitting next to me doing the same job, making the same amount of money, just bought a house. How do they do that?
Yeah.
And we just have to explain that there's tax deductions, savings,
Yeah.
this and that.
Yeah.
And they were more judicious. They didn't go out and buy a new car, lease a new car. You know, they were waiting till they got raises, they became better employees, you know, or you know, they were able to, you know, work a little more. I don't know, you know, sometimes make a little bit more.
Yeah.
You know, they changed the way they saved their money and they made it happen. The other thing too is what's kind of neat is a lot of people think they need to have a lot of money down. And that's not true.
Not the case, no.
If you have a good credit score, 3% down,
average,
conventional.
3% down. They can do zero down.
Down.
I just did a loan for someone they bought for $480,000, and their out of pocket was like $4,000. They did a zero down loan to cover some closing costs. They got a big seller credit from the seller, brand new build too.
Oh wow.
Yeah.
Yeah.
And they you know, $4,000, and they were in a brand new home. And yeah. So, you know, you have, if you're a veteran, VA 100% financing. And then, you know, what I would do, I would help you find a house, and we would write an offer and see if we can get our closing costs covered, which is about 3%. Yep.
Yeah. So the other thing is USDA.
Another 100% financing.
100% financing, same thing. We go, you know, the thing with that is there's some restrictions because if you're in the city of Reading, it doesn't qualify. It's for rural properties.
Yeah.
Correct?
Correct, yeah.
Yeah. And so, you know, we're hunting for properties, looking for the right property for you. We just have to verify that it's in, you know, a certain area that it qualifies.
Yeah, you could do FHA, which requires 3.5.
3.5.
And then you can get a down payment assistance to cover that 3.5.
Oh, wow.
Yeah, it's called a CalHAFA loan. It's the best down payment assistance program out there. You get that down payments, they only charge you 1% a year, and you don't make any payments on that down payment assistance that you got.
Oh, wow.
Until you sell or refinance the home and you pay it back. But it's just like doing 100% financing with down payment assistance.
Down payment assistance. So there's certain income qualifiers that you
actually that one, it does have income, but income is like you can't make more than $180,000.
Yeah.
So
not a problem for most people.
Yeah, in Shasta County, that's
in Shasta
good.
County.
Yeah.
Yeah. Very fantastic.
Yeah.
Kind of stuff. So there are these different programs. You don't need a ton of money down. The other thing too is if you are thinking about purchasing, you want to reach out to Pete because he can run your credit score and take a look. And
in fact, we start with a soft credit pull.
Explain that.
It doesn't affect their credit score. So you can do a soft credit pull, or you can do a hard inquiry. Hard inquiry is going to put a hard inquiry on, so everyone's going to know that you pulled credit, and you'll start getting solicitations. You'll get hundreds of calls if you do a hard credit pull.
Okay.
A soft credit pull is kind of like a secret pull. It's like nobody knows, so no one's going to solicit you, and it doesn't actually put an inquiry on your credit report.
Oh, that's great.
Yeah,
that's
soft
great.
credit pull.
The reason I bring this up is a lot of times people go, oh, I got to pay off my credit cards. I got to do this. I got to do that. And they really don't know what they're doing to raise their credit scores, which can actually make your loan better. Higher the score by a lot.
Yeah.
By a lot. Why don't you explain a little bit about that? I mean, we could get in the weeds on that.
So you have the interest rate. You get a better deal on the interest rate.
Okay.
And also mortgage insurance. A lot of people don't talk about mortgage insurance.
Very important.
Yeah, the mortgage
That's
insurance
expensive.
is more expensive depending on your credit score. It's tiered. Every 20 points, you get both hit on the rate and also the mortgage insurance.
So it can either go up or it can go down.
Yeah. So like on a credit score, going 40 points, it could affect your score. $100, $200 on your payment.
Right.
So it's very important for me to, and this is what we do. Is we help you maximize your payment.
Right.
And FHA is not as bad, by the way.
Okay.
FHA, the mortgage insurance, is no matter what your credit score is. This is why FHA is such a good product. Is no matter what your credit score is, it's the same cost for mortgage insurance.
Right.
It doesn't
now,
matter.
does it on FHA? Does it ever go away?
No.
You
have to refinance.
You'd have to refi out of it or sell the
refinance.
house.
Yeah, of the mortgage insurance.
Okay.
Yeah.
But on conventional,
after 2 years, once you have 25% equity in the home, you can call the investor or the servicing company that you have and say, hey, my home value has gone up and you need at least 25% equity. Now, you can do it 20%, but with the 20%, you can't use the appreciation. With 20% equity, you have to pay the loan down out of your pocket and then get your 20%.
Okay.
after 2 years, if you have 25%, you can use the appreciation of the home going up in value. Get an appraisal, they'll remove the mortgage insurance.
Nice, nice. So there's all these different ways that you can actually improve your financial future, right?
Yeah.
Through homeownership.
Yep.
Yeah, playing the game.
Yeah, absolutely. Yeah, Wayne will help you manage your real estate. He'll help you manage your equity in your home. He'll help you manage and create more net worth for you. He's going to help you maximize the sales price on your home. I'll help you manage the debt.
Right.
Yeah.
We have to work with Pete so you can have some debt.
Yeah, exactly.
Some good debt.
Exactly.
Right.
Yep.
Right. How wonderful it is to be in a home that's yours and it's not a rental. Where somebody's telling you, "Oh, I'm raising the rent. You know, I don't like, all the things that you're doing on my property." Or the other thing that we're seeing a lot of is a lot of people my age that have had rentals for 30 years. They've depreciated them all out. That are at a point now where they're going to sell that house from underneath you. And you might have a great rental rate because they didn't want to rock the boat. But the next time you go out, it's going to be a big wake-up call.
Yeah. I have a client right now, same thing, that they're selling the house and they have to find a place.
Yes.
And it's short notice, 30, 60 days notice.
Yeah.
Hey, I'm selling the house.
Right.
And it's better to prepare.
Absolutely.
Prepare.
Even
if you think you're going to buy in 2 years, 3 years, prepare.
So, this, as far as preparing is concerned, let's talk about gifts. Gift money from family or friend. How does that work? Why don't you explain that?
So a lot of people don't know this, but for a down payment, for closing costs, if you don't have the money, you can get a gift from a family member or a relative to cover any expense that you have on that home. A lot of clients ask me, "Hey, Pete, does this family member have to pay taxes on that?" And you can talk to an accountant, but you can gift up to a certain amount each year. But you also have a lifetime cap on the gift where, you can go over that yearly, but you just can't go over the lifetime. Don't quote me on this because I'm not an accountant, but the last time I checked, it was like $10 million that someone could gift up to. So as long as you're not going over that, then it's not normally taxed. I'm not a tax accountant.
Right.
But you can get a gift. The important piece to this is you can get a gift from a family member to help you with the down payment and or closing costs on a loan.
Right.
There was a podcast I just listened to. I'm always kind of looking, and there's a more advanced way, if you're interested, of doing this, where the relative would put the money up as collateral for the property, but it's not actually doing a gift.
Oh, really?
And the lender does 100% financing
based upon
temporary
cross-collateralization.
Yeah, exactly. And so you still have the money, and so as long as that buyer can refinance within a certain amount of time, you refinance, and then that collateral, that $100,000 or whatever that gift is, gets freed back up, and you can take it. To where it's not a gift, and that money is kept in a savings account or in an account that gains interest. Okay. And the lender will do 100% financing based on this amount from the family member. It's more an advanced move, but for those advanced, financially acute, buyers and families, there's ways to do it.
There's ways to do it.
Yeah.
Wow, that's really So everybody, this is the deal. You need to talk to Pete. To Pete. Call me. Call Pete. Let's work on a plan.
Yeah.
Let's get you in a house. It's just a wonderful thing.
Yeah, absolutely.
Homeownership is great. Plus, it isn't just all about investments either. It's the memories you make in your home.
Oh, absolutely.
Your kids growing up in the home, having the holidays, doing the special things.
And having that security.
Yeah. Well, Pete, thanks for coming by.
Yeah,
it's great
thank you,
to
Wayne.
See you again.
Yeah. It's always good.
And we'll be talking about more incredible stuff about real estate soon.
Awesome. Thanks, Wayne. Appreciate
it.
So
how can they get a hold of you? What's your phone number?
221-7700-530 area code. Reach out to me. I'm happy to talk, even if you just want to, talk about real estate, mortgage, whatever. Give me a call, and we'll We'll definitely talk to you soon.
Great.
Thank you.
Thank you.